Hello dear students, I am Jay Prakash, retired lecturer from TS Residential School Society, Hyderabad, Telangana. Welcome to JP Commerce. In today's class, we are going to learn about a new chapter in accountancy, consignment accounts. The main objective of every business is profit motive. You are familiar with various types of business in the first years of commerce, from sole trading concerns, partnership, and to again companies. The dream of every trader is to earn more and more profit. There are two sources before us to earn the profit. First one, providing additional capital in the business. Two, expanding the business without financial burdens. In the first source, pooling of the capital, manpower, and uncertainty of profits or the drawbacks. Similarly, in the second source, for expanding the business leads to maintenance charges and establishment expenditure or the drawbacks. The producers or manufacturers search the best possible alternative method in between of the above two is selling of the goods through the agents on commission basis. So he or she starts a network to appoint the agents in the new places where the possibilities are more to earn profit and business expansion. Selling of goods with the help of the agents on commission basis is known as consignment business. The word consign means to send in general language. In accounting terminology, consignment means producer or the wholesaler dispatches the goods to his agents to sell on commission basis. Now, the meaning of consignment. In simple terms, consignment is the transfer of the goods from one place to another place for the purpose of sale on behalf and at risk of its owner. So consignment meaning means here selling of the goods through the agents. Now we are transfer the goods from one place to another place for the purpose of the sale. Now here in consignment there are two parties. One is consignor. Who is a consignor here? The person who sends the goods to his agent to be sold by him on commission basis is called a consignor. Consignor is also known as, we are calling as a principal. Secondly, consignee. The person to whom the goods are sent for the sale on commission basis is called consignee. Consignee is the agent, and the relationship between the consignor and consignee is that of the principal and agent relationship. Now, outward consignment. What is the meaning of the outward consignment? The means as the consignor is sending the goods, it is an outward consignment. So to consignee, it is a inward consignment. As the consignee is receiving the goods, it is a inward consignment. Now, consignment account. The accounts relating to the consignment of transactions are called consignment accounts. Here, in this picture, we see consignment account. The first person is a consignor, is a principal, is sending goods, and two is agent. Consignee is agent. Now he is sending goods to consignee. Consignee is selling again in return, selling goods to the customers on behalf of the consignor. So he works or he sells the goods for commission. Now here consignment. In consignment, as we have already discussed, two parties are there. One is consignor, is also known as the principal. Second party is an agent, consignee. Now here in between the goods are consignor is maybe a producer or the wholesaler. He sends goods to the consignee. Now in the books of the consignor, three books of accounts: consignment account, goods sent on consignment, consignee accounts. Now here consignee is related to only concern with only consignor. So consignee prepares only one account. That account is known as a consignor's account. Now what is the significance of the consignment? Now spread of customers. Now, customers are spread over living in different places, but producers and the wholesalers are located in a few places to supply and the goods and services. Middlemen, producers and wholesalers are directly cannot sell the goods to his customers wherever and whenever they require. Some middleman is needed to reach the goods and to complete the distribution channel. You know that the production is taken at one place, the consumers or customers are living all places in different places. So to distribute the goods from the production place to the consumption place, so the producer cannot alone and do such activities, so he is in need of a middleman. Here the middleman is an agent, he is a consignee. Now, consignment business. The business satisfy the customers for providing the goods and services as and when they are required or needed. So, as the agent is very near or living in the same location where the customers are living, so that consignment business is only suitable for expansion. To increase the sales volume, this business is useful to producers and the wholesaler to increase the sales volume. Production, storage. Producers and the wholesalers need not store the produced goods. It can directly dispatches to his agents who are at the nearest places of the customers. Here, soon after the goods were produced, and the manufacturer or a producer need not maintain that is the produced goods in his godown or warehouses, he directly dispatches to his agent, and so that he need not store such the produced goods in his godown, relaxes from the burden. Producer or wholesalers are relaxed from the burden of the storage, so he need not maintain a storage. Customer tastes or priorities. Producers and wholesalers are known the changing tastes of the customers from the agents or consignee and make the changes in the production of the goods, so the sales value increases. As consignor in touch with the consignee, that is agent is living where the customers are living, so that agent knows the taste and passion, the ideology about the goods, so that same inform to the producer or here the consignor. So consignor take up all the changes which are required in the production process. Promotion sales. The total promotion activity is looked after by agents, consignees, and consignor concentrates only on production and distribution process. Here promotion means simply concentration only on the production activity only, so the cost of the production may be decreased and production quantity increases as he pays more and more concentration on the production instead of paying concentration on the sales. Now, differences between consignment and sales. Now, transfer of goods from one person to the another person is a common in both the case, the consignment and sales. But after notice, we found certain differences between the consignment and the sales. In difference, the first point difference is your ownership. Now, ownership, there are ownership of the goods with the consignor and to the consignee. Consignor is only the owner of the goods, even the goods are with the consignee. Whereas sales, ownership and passes from the seller to the buyer soon after the sales is. Now secondly, relationship. Now the relations between the consignor consignee is that of the principal and agent relations, whereas here the relationship between them are in sales activity, buyer and seller is in creditor. If it is in a sales, is in a debtor and a creditor relationship only. And same return of the goods, consignee may return the unsold goods without notice to him, and consignee may return the goods, the unsold stock. Now, goods once sold in general cannot be returned in, that is a normal condition. Fourth point, risk. The concern has to bear all the risk and all the expenses attached to the goods till that is in a sale of the goods. Now here, risk and the ownership both are transferred to the buyer with the goods. Expenses. All the expenses related to the consignment are borne by the consignor. Now after the sale of the goods, all the expenses are borne by the buyer only. Now expenses, all the expenses relating to the consignment are by the consignor only. Here, soon after the goods are sold, all the expenses are to borne by the buyer only. Now payment, the consignee is not liable to make payment till the goods are sold. Cash sales, payment is done immediately after the goods are transferred. Now commission, gives commission to the consignee for the sale of the goods. Now seller may allow discount on sales sometimes but does not give any commission. Right to sell the goods, the consignee has right to sell the goods only on the name of the consignor but not on the name of consignee, his name. The buyer has right to sell the goods on his own name because already the design ownership is transferred. Ownership passes from seller to buyer. The account sales are required to be submitted periodically by the consignee and to the consignor. Account sales are not required to be submitted by the buyer to the seller. Act. Consignment transactions are governed and regulated by the Indian Contracts Act 1872, whereas here sales transactions are governed and regulated by the Sale of Goods Act 1930. Profit or loss consignment belongs to the consignor only, whereas here the profit or loss on sales belongs to only the seller. Now order, there is no order from the consignee and now there must be an order from the buyer. In consignment, we notice that there are certain new terms to the student. The first one is a pro forma invoice. So what is a pro forma invoice? It is a statement prepared by the consignor and sent it to the consignee along with the goods. Means it is sent along with the goods describing all the details of the goods sent to consignee. Now example, in that pro forma invoice, and we noticed that means it describes pro forma invoice describes about the quantity of the goods, weight, expenses incurred and mode of the transportation, etc. Now minimum price of the goods to be sold. Consignor mentioned in the statement what is the minimum price of the goods to be sold by him. Now pro forma invoice, it is an advice note to him to operate the business transaction to maintain the records in consignment. Consignee understands at what price the goods are to be sold. So this is about the pro forma invoice. It is nothing but a statement prepared by the consignor and sent it to the consignee. This is pro forma invoice tells about the quantity of the goods, weight, expenses incurred, mode of transportation, at what price the consignee is permitted to sell the goods are mentioned in the pro forma invoice. It is also treated as an advisory note. So consignee has to follow the price mentioned in the pro forma invoice, the instructions mentioned, terms and conditions mentioned in the pro forma invoice. Now, second one is account sales. In the word itself, we have a meaning. Account sales means it is a statement tells about the sales, how much sale made by the consignee. A statement prepared by consignee about the sales made by him and sent it to the consignor with all the details of the sales proceeds. Now it is a statement of the sales account. It contains the following details. In account sales, what is the amount of the sales, what are the expenses incurred by the consignee and advance remitted by him to the consignor, amount payable to the consignor. Now a format of the account sales. Srikanth and traders sent 100 cases of goods to the party. goods received and sold on behalf of the Srikanth traders. This is a pro forma of an account sales. With this pro forma, we can clearly understand what is an account sales. Here date column 2020, February 28, sales, particulars column here sales. So 80 cases he sold at the rate of 200 and 20 cases he sold at the rate of 200. 80 and 200 and altogether we have the 20,000 rupees. So yes, here expenses incurred by the consignee 300 rupees expenses and carriage 400 rupees, sales expenses 2500. Total altogether 2500 plus 400 plus 300 is equal to 3200. These are the expenses minus 20,000. So net sales proceeds 16,800. So less advance remitted 10,000 rupees. Already the amount sent by consignee to the consignor. So balance due remitted as per bank draft enclosed. Sent 6,800 rupees sent in a bank draft. This is about for the account sales. The next term is consignee commission. In commission, and there are three types of commissions are there. Means the consignor allows three types of commissions to the consignee. Consignor allows commission to the consignee for his services on the basis of the sales. The commission may be of three types. First one, ordinary or a normal commission. It is a normal commission is allowed to the consignee by the consignor for his services rendered as an agent of the consignor. The commission is calculated generally at agreed percentage and between consignor and consignee fixed percentage on the gross proceed sales. This is a ordinary commission. This commission is allowed on the sales. In the earlier cases, we saw in account sales 20,000 rupees consignee sold goods. On 20,000 rupees, let us take example 10 percentage means 20 into 10%, 2,000 rupees commission. We are allowing this commission is a normal commission which is allowed only on the sales. Now second commission is a delicate commission, very important in examination point of view, and this commission and credit sales is inevitable in any business. Now there is a possibility of risk of bad debts to the consignor. Consignor don't know about the customer's creditability, and now to avoid the risk of bad debts, the consignor allows some extra commission to the consignee when he bears risk of bad debts in the consignment business. It is also calculated on the gross sales proceed. It is an Italian word, means delicate commission derived from Italian word, and it means that belief or trust to guarantee to the principal that purchaser is a solvent. The seller is responsible for the debit. Here the main intention on behind of the delicate commission is, now consignor is living one place, consignee is living in another place. Consignee is living in where the customers are available. In such case, so consignee knows well about the credibility of the customers. The consignee sold goods without taking any utmost care, so it leads to the bad debts. That is a loss to the consignor. So the consignor to take utmost care allow some extra commission and to the consignee, so that the consignee take all precaution measures in credit sales to avoid the risk of bad debts. This is also calculated on the gross sales. Now third one is an overriding commission. It is an additional commission payable to the consignee for his extra efforts put in the business to increase the sales and boost up the sales of new product purchased by the consignor, selling the goods at higher prices than the price fixed by the consignor. This commission is also calculated on the sales proceed. All the normal commission or ordinary commission, delicate commission, and his override commission, all are calculated only on the gross sales. Why the consignor is allowing there's an override commission? To put maximum efforts, extra efforts in the business to increase the sales or to increase the new product pushed into the market, and for such cases The consignor is allowing some extra commission to the consignee. Such commission is known as an override commission. This is, and sometimes another also, this commission is allowed when the consignee sold goods at higher prices, more than the price fixed by the consignor. Let us example in the earlier cases, 200 rupees, let us example, for one case, if the consignee sold it as 220 rupees or 230 rupees, that 30 rupees in an extra price, that is a minimum price fixed by the consignor. So more than the price fixed by the consignor, the consignee sold the goods that is on higher prices. In such cases, the consignor holds an extra commission. Such commission is known as an override commission. Now, advance on consignment. So sometimes the consignor asks the consignee send some amount in advance. Sometimes the consignor may demand the consignee for some deposit as a security for the goods sent on consignment is called as an advance on consignment. This advance may be given by the consignee by accepting a bills of exchange or a bank draft or a check or a online banking or a cash, etc. Thank you for watching my videos. Please like, share and subscribe JP Commerce for more videos.